A major shift is coming, and if you are watching this video right now, then you are standing right on the edge of one of the most surprising financial turning points we've seen in years. So pay very close attention, because what I am about to share with you isn't surface-level speculation. It's deep researched, real-time analysis that could completely reshape how you view the Iraqi dinar going into 2025. And before we dive into this, make sure you hit like, subscribe, and drop a comment, because trust me, you do not want to miss a single update, as this situation is evolving faster than most people realize. Now let's get into the core of what's unfolding, because something unusual has been happening inside the Central Bank of Iraq's internal strategy discussions, something that is hinting toward a major currency adjustment that analysts have been whispering about quietly for months. And as we move into 2025, those whispers are turning into louder signals. Over the past year, Iraq has been restructuring the backbone of its monetary system, enforcing stricter banking standards, tightening currency auction procedures, and increasing transparency with international regulators. And while to the average person that might sound like boring technical steps, to anyone who understands currency behavior, these are classic early signs of a system preparing for a value shift. What makes 2025 particularly important is the alignment of Iraq's domestic economic stability with external political and commercial pressure, pushing Iraq toward a stronger international presence. Oil revenues have been more stable than projected, foreign investment interest is returning piece by piece, and the CBI has been repeatedly referencing long-term monetary reform in official statements without fully elaborating on the timing. That alone raises eyebrows, but what raises them even higher is the fact that the Iraqi dinar's current artificial positioning continues to conflict with Iraq's actual economic capacity, meaning the currency is undervalued relative to its true potential. Several economists believe the CBI is slowly preparing the environment for a controlled adjustment, not an overnight jump, but a strategic phased value shift that aligns with Iraq's growing stability. Looking deeper, you see that 2024 and early 2025 were dominated by IMF consultations, policy reforms, and digital currency modernization, all foundational pieces of a looming reset. And when a central bank modernizes frameworks, tightens compliance, and aligns with global monetary systems, it is usually laying the groundwork for a smoother transition into a new exchange structure. Add to this the fact that Iraq has been working aggressively to reduce dependency on the dollar, encouraging local transactions in dinars, expanding multi-currency settlement channels, and boosting forex reserves, all of which point toward a state that is preparing to elevate its currency's position. Market watchers know that the dinar has always had long-term potential, but never before have we seen alignment of internal reform, government pressure, global regulatory coordination, and currency restructuring at this level. 2025 is now shaping up to be the year where these pieces finally converge, and the indications suggest something bigger than the routine rate tweaks of the past. Stick with me, because in the next paragraph, we're going to break down exactly what analysts believe the CBI's next steps could be, and what that means for anyone tracking the Iraqi dinar's potential trajectory. As we move deeper into the analysis, the next major point you need to understand is how the Central Bank of Iraq is positioning itself for 2025, because this positioning is where most experts are now detecting the early signals of a strategic adjustment that could influence not just Iraq, but broader regional markets. When you observe the CBI's actions instead of their public statements, a very clear pattern begins to emerge, and patterns in monetary policy are never accidental. For example, the CBI's consistent effort to stabilize the market rate, close loopholes in the dollar auction system, and crack down on unregulated transfers shows that the bank is preparing an environment where the dinar can function with more autonomy. A currency cannot be strengthened or internationally positioned if it is leaking through informal channels, so the CBI's cleanup measures are more than administrative. They are groundwork for structural change. In addition to this, Iraq's rapid expansion of digital banking infrastructure suggests the CBI wants the country to integrate more efficiently with global financial networks in 2025, something essential for any nation considering a currency adjustment. Iraq is even increasing cross-border settlement capabilities, making transactions easier for international investors, and the more open and transparent a monetary system becomes, the easier it is to justify upward adjustments in currency value. Another crucial signal is Iraq's rising foreign reserves, which have grown substantially due to oil exports and tighter financial policy. A country cannot responsibly adjust its currency without strong reserves to back it, and Iraq's reserves now provide a cushion that would help stabilize any shift in value. This isn't guesswork. This is classic central bank behavior prior to controlled adjustments. Now, let's factor in the global financial climate. As the US dollar faces external pressure and oil-backed economies continue strengthening partnerships across Asia and the Middle East, Iraq is in a prime position to recalibrate its monetary stance. A stronger dinar would not only increase national purchasing power, but it would also help reduce the country's dependency on the dollar, something Iraq has actively been aiming for. Investors have also noticed a pattern in CBI language over the past year. Terms like reform, restructuring, modernization, and stabilization have appeared more frequently in official reports, which typically precedes adjustments in many global cases. And while the CBI is not publicly announcing an RV or a massive leap overnight, what seems far more realistic and strategically sound is a phased, intentional rate strengthening designed to gradually bring the dinar closer to its real economic backing. The important takeaway here is not blind hype. It's recognizing the credible signals coming from monetary and fiscal behavior. Analysts who remain grounded in economic fundamentals are now saying that 2025 may be the clearest opportunity Iraq has had in years to elevate its currency profile. In the next paragraph, we'll dive even deeper into what global experts believe the potential scenarios for 2025 could look like and how each scenario let's break down the potential 2025 scenarios that experts are projecting and what each one could realistically mean for the Iraqi dinar, because understanding these scenarios is the key to seeing the big picture. Scenario 1 is what many analysts call the controlled upward adjustment, where the CBI introduces a carefully calculated rate increase that aligns with Iraq's economic indicators. This type of adjustment is not a sudden overnight change, but rather a strategic step that strengthens the dinar while keeping inflation stable and protecting trade balances. It allows Iraq to test international reaction, manage liquidity, and prepare for future steps without destabilizing the market. Scenario 2 is a multi-phase appreciation model in which the dinar is gradually strengthened over several policy cycles. This model is often used by emerging economies transitioning into more globally integrated financial systems, and given Iraq's modernization efforts, it is a strong possibility. It would allow the CBI to adjust the rate in stages as reforms continue, investor confidence grows, and Iraq secures more stable long-term revenue. Scenario 3, which is less likely but still discussed among experts, is the accelerated reform outcome in which Iraq's political environment, foreign investment surge, and international agreements push the CBI to adopt a faster adjustment than expected. This scenario would only occur if economic conditions rapidly align, and while it is not the baseline prediction, it remains part of the broader conversation because Iraq has shown unpredictable bursts of progress in the past. All three scenarios have one thing in common. They represent upward momentum, not downward trajectory. The conditions we are seeing today, expanding reserves, stabilization policies, reduced reliance on the dollar, and modernized financial systems, are not symptoms of a currency weakening. They are symptoms of preparation for elevation. And remember, no credible economist is predicting a collapse of the dinar. All data points lean towards strengthening, not weakening. As we step into 2025, the most important thing for anyone watching this space is to stay informed, stay logical, and understand that the biggest financial opportunities are usually seen first by those who study patterns, not rumors. Iraq is building a foundation, and foundations are not built without purpose. If you want more updates like this, make sure you stay connected, because this story is evolving every single week. And before we end this video, here's your final call to action. If you want to stay ahead of every major Iraqi dinar development, if you want real updates with real analysis instead of recycled hype, then smash that like button, subscribe, turn on all notifications, and drop a comment below telling me what scenario you think is most likely in 2025. Your engagement helps this channel grow and ensures you never miss the information that could shape your financial future.